For more on how the situation in the Red Sea is impacting energy, let's bring in Kevin Book, Managing Director of Research at ClearView Energy Partners. Kevin, welcome to you. Just talk us through kind of how serious a situation you think this is.
Well, you can see the market response now. It was odd because a week ago when we wrote our first note on this, the market didn't seem to be pricing it in at all. One after the other, we're seeing operators deciding that they're going to take longer routes. Longer routes introduces latency, but it doesn't necessarily mean that crude doesn't get to market. On the other hand, if you introduce enough latency, you start to run into questions of choke points at the Suez Canal, that northbound traffic that Pippa was mentioning, adding to it, further congestion. And it raises, I think, the broader question of whether or not the market is thinking about geopolitical risk properly at this point. We seem well supplied, worried about demand weakness, maybe sleeping through supply risk.
Could the United States, with its carrier strike forces deployed in that part of the world, take out the launch points of these Houthi rebels who are sending missiles or drones to attack these ships? Could they do that? And who would favor that and who would be opposed to that?
Tyler, not only could they do that, but CENTCOM posted a picture of an F-18E Super Hornet fighter landing on the deck of the USS Eisenhower adjacent to those very targets. Doing that would solve the problem in the short term potentially, but create other problems that could be riskier from an oil price perspective and otherwise. The kingdom has been working on détente with the Houthis and trying to get peace in Yemen. This could potentially disrupt that fragile peace. It also would be a message that Iran might decide opened up the opportunity for other attacks on other regional transportation targets.
In other words, Iran is backing the Houthis, and they would view an attack against them as against their vital interests.
Well, Iran has kept their distance, and probably very intuitively, we all know that every official in the administration who's spoken on this usually mentions them as the Iran-backed Houthis. But on the other hand, they haven't directly engaged. They might not directly engage, but they have proxies they can deploy in other ways. And we are now at a point where it is transportation that is at risk, but not production. There's détente between Riyadh and Tehran, Chinese brokered détente. It may be fragile, though, and testing that détente is something that I think that the kingdom probably wouldn't want to see.
And that was a hard-won détente because the Saudis and Iran have collided over the Houthis in the past, correct?
Absolutely.
Kevin, so the Houthis are basically saying, no, we're only targeting Israeli ships moving through the Red Sea. But what should basically big corporations do, even if that is the case, and if they're allowed to continue those kinds of attacks? And how much does that affect not just the oil markets, but global commerce?
Yeah, Kelly, I'm not sure you can just take the interpretation that because they say they're only going after Israeli ships, it's only Israeli ships. First of all, they've said that nexus to Israel, much like our U.S. financial sanctions, trying to essentially make toxic anyone who does business with Israel. But if they're working from old databases, as your own Lorianne LaRocco has written, then it very well could be a problem because ships that are no longer Israeli nexus could be targeted. But also, it seems like it may be broadening. It may be trade writ large. And so from a risk management perspective, it's very hard to see until there is some task force stood up or some mechanism that regulates the risk more obviously than just USS Carney shooting down any drones that it can hit. I think a lot of companies are going to be taking steps to be prudent.